Hi friends, my name is Krishna Akamalla. Welcome back to my YouTube channel. In our previous video, we discussed about one illustration which talks about cash book, adjusted cash book. And after preparing the adjusted cash book, we also prepared a bank reconciliation, right? In today's video, again, we are going to discuss about the similar example wherein we are going to work on adjusted cash book. After preparing the adjusted cash book, we will also prepare the reconciliation, right? So without wasting much time, let us get into the problem. Okay. Okay, guys, let us read the problem. On 30th December 2019, the bank column of A. Phillips is the name of the person. Cash book showed a debit balance of 4,610. A debit balance of 4,610. What does it mean? Debit balance of cash book is nothing but as an asset. It is a favorable balance, right? It has a favorable balance of 4,610. On examination of the cash book and the bank statement, you find that checks amounting to 6 lakhs 30, which were issued to trade payables and entered in the cash book before 30th December 2019, were not presented for the payment until that date. So the big story given, there is nothing in that. It is check issued but not presented. As simple as that. Next, checks amounting to 2,50,000 had been recorded in the cash book as having been paid into the bank on 30th December 2019. Paid into the bank. It doesn't mean that we paid. We deposited into the bank, but were entered in the bank statement on 1st January. 30th December is the reconciliation date, but that was not collected by the bank till 1st September, 1st January. So this is an important point to be recorded. Next, a check received for 73,000 had been dishonored prior to 30th December 2019, but no record of this fact appeared in the cash book. I will explain the journal entry. I already explained in my previous video. Once again, I'm going to explain this. A dividend of 3,80,000 paid direct to the bank has not been recorded in the cash book. So bank collected the dividend, but a communication was not given to A. Philip, because of which that entry was not recorded. This is a omission. Next, bank interest and charges amounting to 4,200 had been charged in the bank statement but not entered in the cash book. This is also an omission. Next, no entry had been made in the cash book for a trade subscription of 10,000 paid by a banker's order in November 2019. No entry had been made in the cash book. That means what? This is also a omission. Next, a check for 27,000 drawn by B. Philip. B. Philip issued the check, had been charged to A. Philip. We are preparing bank reconciliation in the books of A. Philip, right? That is what we discussed in first line itself. So this is A. Philip details. But B. Philip issued the check, but banker by mistake recorded in A. Philip's account. So this is the mistake from banker side, not from our side. Okay, so you are required to make appropriate adjustments in the cash book, bringing down the current balance, and to prepare the statement reconciling the adjusted balance in the cash book with the balance shown in the bank statement. Very simple thing we are going to do now. Right. On 30th December 2019, bank column of A. Phillips cash book showed a debit balance of 4,610. So this is the debit balance. So we need to prepare the adjusted cash book. A. Philip cash book, bank columns, clear, debit, credit. This is receipt side. This is payment side. Very simple. Now, what is the balance they have given? 4,600 debit balance. That means it is an asset, debit side. To balance brought down 4,610. Clear? Next. Checks amounting to 6,30,000 which were issued but not presented. Checks we issued. As soon as we issue the check, where do we write? Issued means paid. So payment side we would have written already, but that was not presented in bank. This is neither a mistake from our side nor a mistake from banker side, because they have not presented. Suppliers did not present the checks. That is one. Second thing, it is not an omission from our side, because as soon as the checks is issued, we recorded in our books. Where is the question of omission here? So it is not omission also in our books. So this entry will not come in our adjusted cash book because there is no error, there is no omission. Next, checks amounting to 2,50,000 had been recorded in the cash book as having been paid into the bank on 30th December 2019, but were entered in the bank statement on 1st January. Before 30th December 2019, this entry was not made. So we deposited the checks, but not presented into the, but not collected by the bank. So that is not an omission, that is not an error as well. So this entry also will not be recorded in adjusted cash book. Clear? Next, a check received 73,000 had been dishonored prior to 30th December 2019, but no record of this fact appeared in the cash book. So this, to this extent, entry was not recorded. What is that we need to do for this now? I already told you, if the check got dishonored, what entry we need to prepare? Amount has to be received from the drawee and this has to be paid to the bank. Amount receivable from drawee and payable to bank. So what entry we write? Drawee account debit and to bank account. So drawee account debit to bank account. So we need to credit this 73,000 as credit, right? So this is what has been recorded. Next, sorry. Next point is a dividend of 3,80,000 paid directly to the bank had not been recorded in the cash book. A dividend of 3,80,000 paid direct to the bank. Somebody went and directly paid the dividend. Dividend is our income. So that has been credited in bank but not recorded in cash book. Why that has not been recorded in cash book? Because that information was not given to A. Philip. So that's 3,80,000 is a receipt for me. Dividend is receipt for me. So 3,80,000 receipt side we have recorded. Clear? Next, bank interest and charges amounting to 4,200 had been charged in the bank statement but not entered in the cash book. Bank interest and charges debited by the bank. That means what? They have recorded in passbook payment side, but they have not communicated to us. This is a omission. So this entry we have to record it now. Where do we need to record it? This is the payment for us, right? So it has to be recorded in payment side. So 4,200 I recorded in payment side of the cash book. Are you clear? Next, no entry had been made in the cash book for a trade subscription of 10,000 paid via banker's order in November. So 10,000 we paid. We in the sense we gave standard instructions to the banker. Banker paid on behalf of us, but that entry was not recorded by us. So we need to record. That is a payment. That is a trade subscription. Subscriptions we are supposed to pay, but we requested banker to pay. So banker would have paid the 10,000 rupees on behalf of us. So that is a payment. So we need to record that in payment side. 10,000 was recorded in payment side. Next, a check of 27,000 drawn by B. Philip has been charged to A. Philip bank account by mistake in the December 2018. Who did the mistake of this? Not by us. B. Philip has issued the check. Banker has to record that in B. Philip account. But what banker did? They by mistake they recorded in A. Philip account. So it is not our mistake. If it is not our mistake, why should I rectify my adjusted cash book? I don't require to adjust. So ignore this point for adjusted cash book purpose, but we will record that as a part of our reconciliation. Are you clear now? So now let us understand how to balance this cash book. So now you have the balance of 4,60,000, 4,610, 3,80,000 put together 3,84,610. You put the same amount and subtract these amounts, then you get 2,97,400. 5 balance carried down, 2 balance brought down. So this is the favorable balance. This is not a overdraft. On what basis I am saying that it is not an overdraft balance? It is showing a debit. If it is showing a debit, what does it mean? It is a favorable balance for me. Since it is a favorable balance, it will be considered as an asset. Then, now we will take this balance and start preparing the reconciliation. How do we prepare the reconciliation now? As I said, we need to follow the same rules. What are the rules we need to follow? I told you, right? Let us prepare cash book, passbook, cash book, passbook, debit, credit, debit, credit. This is receipt side in cash book. This is the payment side in cash book. This is payment side in passbook and receipt side in passbook. Now, What is the balance you need to take as per cash book? 2,97,410. This is the debit balance. So debit side of the cash book, 2,97,410 we will put, and we will take the same balance in passbook as well. 2,97,410 we put in credit side. Why credit side? It is liability for the bank. One way of looking at other side, since we recorded here in receipt side, in bank also need to record it in receipt side. Now, where is the question mark we need to put? We need to put question mark on passbook. Why question mark on passbook? Because we have taken balance as per cash book. We are going to identify what is the balance as per passbook. Since we are going to identify passbook balance, we are keeping question mark on passbook. Now, what is the rule? If the question mark balance increases, we will add. If the question mark balance reduces, we will subtract. Simple as that. Now, 2,97,000 bank reconciliation as on 30th September we mentioned, and 2,97,410 balance we have taken here. Now, checks issued amounting to 6,30,000. 6,30,000 worth of checks issued, but they have not presented. Issued means what? Paid. So when we issue the checks, when we make the payment, we will write in credit side of cash book 6,30,000 we have recorded. So one debit we recorded in credit side. One debit and one credit, balance will come down. Balance got reduced. Question mark balance, what happened? This is reduced. This is reduced means this is increased, right? So question mark balance got increased. So you need to add that. Add 6,30,000. Checks not presented, not yet presented. 6,30,000. Getting my point? Right. Next, remove the 6,30,000. Now you go back to the same old balance, and again, checks amounting to 2,50,000 had not had been recorded in the cash book, having been deposited in the bank but not collected by the bank. So we deposited 2,50,000. When we deposit, it is a receipt for us. When we deposit, it is receipt. So we have recorded in our cash book, but not collected by the bank. If it is not collected by the bank, that wouldn't have been recorded in the passbook. Now, what is the balance? Cash book balance is increased. Are we looking into cash book? No. Question mark is on what? Passbook balance. What happened to question mark balance? Question mark balance is reduced. Why? Since the cash book balance is increased, passbook balance would have been reduced. If the passbook balance would have been increased, cash book balance would have been reduced. So here in this particular case, cash book balance got increased. Hence, we need to assume that passbook balance is reduced. Question mark balance is reduced. Since question mark balance is reduced, we are subtracting this less. Checks issued but not entered, collected by the bank, 2,50,000. 2,50,000 we recorded. Next. Next point. A check received 73,000 had been dishonored prior to 30th December 2019, but no record of this fact appeared in the cash book. I already told you entry, drawee account debit to bank account, and that has been recorded here of 73,000, and that has been adjusted, and we have taken adjusted cash book balance only here. So there is no need to bring again this point as a part of reconciliation, because this is already adjusted in the cash book. If any transaction is already adjusted in the cash book, there is no need to bring that point as a part of reconciliation, because you are taking adjusted cash book balance. Since adjusted cash book balance is taken, this error has already been rectified. So you don't require to bring in here. Next, a dividend of 3,80,000 paid direct to the bank had not been recorded in the cash book. So we have already recorded this 3,80,000 here, right? So this is already adjusted in the cash book, and we got the adjusted cash book balance. Same adjusted cash book balance has been taken into account here. So that means what? This entry was already adjusted in the cash book, and there is no need to bring in as a part of reconciliation. Next, bank interest and charges amounting to 4,200 had been recorded in the passbook but not recorded in the cash book. This is also recorded in the adjusted cash book here, because we already adjusted, because it is omission in the cash book, right? That omission entry already been considered, it has been recorded and adjusted, and we took the adjusted cash book balance for reconciliation purpose. Hence, we don't require to make any adjustments in reconciliation again. Clear? Then, no entry had been made in the cash book for a trade subscription of 10,000. This also we adjusted because entry was not recorded in the cash book. That is what he's saying. So that was a omission. That omission has been taken care. Here you see, this 10,000 is already recorded as trade subscription, already adjusted in cash book. We took adjusted cash book balance only. So you don't require to record as a part of the, again, in reconciliation, because that has already been taken care in the adjusted cash book balance. Next, a check of 27,000 drawn by B. Philip had been charged to A. Philip. This is important. This is the banker mistake. What banker did is, B. Philip issued a check that has to be recorded in B. Philip passbook. But where did they record? They recorded in A. Philip cash book, passbook. So since it is an issued check, they would have debited this 27,000 in passbook. So since it is debited in passbook, this balance has been reduced. This is a credit balance. This is a debit. One credit and one debit, balance will come down. Your question mark balance has been reduced. Since your question mark balance is reduced, you need to subtract this 27,000. So what did we do now? We have adjusted all the transactions, and now we are going to balance this to arrive our passbook balance. So what we did here is, we have taken 2,97,410 as the balance, and 6,30,000 we added. It has come to 9,27,410. From there, 2,50,000 we reduced, and 27,000 we reduced. We got 6,50,410. What is this balance? This balance is also a favorable balance. This is a favorable balance. Do you agree? And we got the positive balance. So this is the favorable balance. This is also favorable balance. If this balance would have come negative, then this would have been overdraft, because here it is favorable. If it is favorable and if you get negative here, it is unfavorable. If you get negative here and if you get positive here, then it is a favorable. So what you need to understand here is, since this is the favorable and we got the same positive balance here, so this balance is also a favorable balance, right? So now as per passbook, we have 6,50,410 as the balance. So you simply write as balance as per passbook, and that's all about adjusted cash book. And after preparing the adjusted cash book, we also learned how to prepare the bank reconciliation. I hope you are clear about the topic, right? Thank you so much.